and Biz Talk Today TV. Welcome everyone to Buy, Hold, Sell. I am your trader, Todd Schoenberger. My colleague, Tobin Smith, is going to be away on assignment today and will not be able to join us. He is covering the government shutdown, so hopefully we'll have a report from him sometime in the near future. But joining me today, Aquiles Larrea, CEO and founder of Larrea Wealth Management. Aquiles, as you know, we had a great third quarter. We saw the S&P up nearly 8%, truly remarkable. Are you expecting a repeat performance in the fourth quarter?
Yeah, I'm going to see a little bit of a correction, a little bit of a pullback right now, as we normally see at this time of year. Because if you look at the hedge funds, you look at the mutual funds and large investors, they have to take their profits. They have to declare them now or to take their losses. So we're going to see a bit of a pullback, I would say, in the near term, in the next 2-3 weeks, and then it's going to clear out and it's off to the races. Let's just hope that this political thing doesn't get in the way of us making money, right, Todd?
That's right. Well, we'll get into that in a little bit. But to follow up on that, that would make a lot of sense. Historically, as you know, October is not very friendly to the markets. So there would be, you would think, we would just stick into that historic pattern. We would have a bit of a sell-off. But what are your thoughts about earnings? I mean, there seems to be a lot of pressure right now on the upcoming earnings period, and add in the fragile labor market. It's giving traders a little bit of angst, though. I mean, is there anything to support maybe a run up in November and December?
I think you're right. I think, with the revised numbers that we saw, it's definitely giving traders a lot of pause. They don't have enough information. I mean, earnings are starting to come in a little weaker than expected. And we kind of knew that was going to happen because you can't be off to the races all the time. But at the same time, there is plenty of room for growth, especially in the technology sector, especially in the AI sector. And therefore, there's definitely some room to make money in there. So if you're a good investor, you're looking for the pullbacks as an opportunity to get those high quality names into your portfolio.
Yeah, and I'll ask you about some of those high quality names. We just want to keep the audience on the edge of their seats. But let's think about let's talk about the government shutdown. It started middle of the night, 12:01, and it doesn't seem like there was a Senate vote today, but it didn't go very far. Do you think Wall Street should be concerned with this?
Historically, Wall Street doesn't care. I mean, they care a little bit, but if you look at the past history of these shutdowns, the market actually took off. The only reason that I was saying before, that we see a pullback is just we've had a huge run up this year, Todd. And that kind of run up without a correction, without a pullback, is not a healthy market. As a matter of fact, it's an inefficient market, which is the last thing we want to see. With the last quarter of the year, we should see some decent earnings coming in, but at the same time, we should also see stocks moving towards the upside, regardless of what's going on the political front.
Wow, that's interesting. So, what happens then? This Friday, we have a labor report. If the government's still shut down and closed for business, then there's no labor report. And if this goes on for a few weeks, say it goes on for 30, 35 days, well, when the Fed meets again, they won't have a labor report to examine, a CPI number to take a look at. There's a lot of data points that they will be missing. What exactly do you think the Fed would do in that situation at the October meeting?
Well, I don't have my crystal ball in front of me, Todd, but obviously that data is going to be delayed, and the Fed's going to have to evaluate the merits of everything else that they have in front of them. They are on pace for these rate cuts, so I don't think that's going to change at this particular point. But I'm spitballing here. In my opinion, I think that they're going to have no choice but to continue the rate cuts, those two more cuts that they talked about this year, and then one more for first month of 2026. But it could be anybody's guess. Depends how those numbers come out. Depends on what the Fed sentiment, what they're feeling at that particular moment.
Yeah, that does remain to be seen. And it would be interesting. I mean, we did get the ExxonMobil announcement that they're shedding about 2,000 jobs. There's been a number of layoff announcements, but that's really not concrete evidence that the Fed is probably going to need to take a look at to make a monetary policy decision. Let's go to the high quality names you mentioned earlier. I want to get your thoughts on this. I know that you give exclusives to a lot of the other media outlets, and that's fine. But give our audience some names that you like that you can disclose at this time.
Yeah, a couple of names that I like off the top of my head that we're looking at cloud computing. I've talked about Kingsoft Corporation in the past with the cloud data and storage. We still love Palantir. Palantir,
Volunteer, yeah.
especially with the government being involved, and NVIDIA as well. So we're getting into these three technology AI develops. But I'm also looking at who is going to power this technology because AI requires a lot of power. We are looking at several names right now, Todd, so I can't divulge what we're looking at just yet, but
Okay.
you have me back. I'll be happy to share it with you once we're ready.
Well, you could count on that one. But you are right, though, because you start talking about the power, I assume you're speaking of electricity. So when you're thinking of electricity infrastructure, it's tough not to consider that for your portfolio because it's almost like an ancillary benefit of following in the obviously on the in the footsteps of the AI trade. But with AI though, there's been so much talk about it. This has been going on. It's a number one story obviously on Wall Street, and it's going to continue that way. In your opinion, though, where are we in the AI trade? Do you think it's still early innings? Do you think it's later in the game? Or I mean, reason for my question is, should new investors be cautious?
Well, I don't think it's time to be cautious. The AI is still in its infancy, Todd. So what we're looking at here is we don't have the infrastructure yet. And there are several companies. I mean, you talk about the power. It's like they're going to need nuclear reactors, some of these companies, in order to power these things. So who benefits from that? That's what investors, I think, in the future, going forward in the future, should be looking at, in addition to the AI companies themselves, who is uniquely positioned year over year to make more money in this space and and conversely make their investors more money. And that's how I think investors should be looking at this big picture. So you have a couple of moving parts there in the AI space, but at the same time, it's just so early in the game, in my opinion, to really think, oh, well, how can we be in late innings if we're just getting started in infrastructure? So it's one of these things I always tell people, be strategic, be cautious, and be aware of your surroundings because next thing you know, it's gone. The opportunity's gone. Don't wait too long.
Yeah, that's great advice. So, what about on the real estate sector? I've been asking a lot of our featured guests, such as yourself, this question because now with monetary policy, we're in an easing cycle, just started, of course. But you would think that this will be a bullish signal for the real estate sector. What's your
Yeah,
opinion?
you know what? You're not wrong, Todd. When you look at housing and you look at the starts and you look at, just the sales that are going on, this is a leading indicator. So one of the things you want to be aware of is, are more people going to be purchasing homes as the rates start to come down? Now, what you have to remember is those are short-term rates. When you look at the mortgage rates, you're talking about a 30-year rate, and they're more tied to the 10-year treasury. So we're not looking long term on this. What I'm feeling as the mortgage rates start to go down, it's going to generate more activity, but it's kind of a double-edged sword because the prices of the houses are going to go up, as historically has happened whenever the mortgage rates go down. And they're not strictly tied to what the Fed does, but it is affected, of course, by the Fed. But when you start to see them go down in the near term, housing prices go up. But I would tell anybody who's looking, including myself, who's looking to buy a house, I would say give yourself 3 to 5 months because once it all kind of shakes out, you're going to see great opportunities out there to pick up some good housing out there, whether it be your first home or whether it be an investment property as such.
Yeah, it's sound advice, Achilles. I like that. What about the retail sector? Where, as you know, going into the holiday shopping season tends to be a strong trade for retail stocks, but there is this feeling of perhaps pressure on the consumer right now, especially at the household level with the household balance sheet. Do you think we're going to have a robust retail shopping season?
I can't see it. I know that people in spite will continue to buy whatever it is, for gifts for the holidays, but it's not going to be as tepid as it was the previous years. So I'm going to see I'm going to say here, Todd, we're going to see a little bit of a pullback, anywhere between 5 to 10%, what people might normally do. But once again, I'm spitballing on that percentage. It could be more, it could be less. I'm already hearing across the board that people are going to be pulling back on their purchases. They're not pulling back for per se Thanksgiving, but for Christmas, you know, before they would get into a certain amount that they were going to purchase for family, but they may be more laser focused on what exactly they're going to buy out there and may not make those big purchases as they did in previous years.
Yeah, yeah. So no Cadillacs in the stocking is what you're trying to tell me.
Sounds good.
So my final question for you then, can you give the audience a non-tech theme that you like?
Yeah, we're big believers in infrastructure. So the Caterpillars, the John Deeres of the world, we still think that the US and other parts of the world are way behind in their infrastructure. Companies are going to benefit from that because at some point, and we saw this with the infrastructure bill here in the United States, which by the way hasn't really reached its full
Mhm.
capacity in terms of what they need to do here as far as roads and bridges are concerned. But there's an area where if you get in now, it doesn't mean it's cheap. Absolutely not. It just means that there is more room for capacity at this point. And year over year, infrastructure has done well along with technology. If you look at just Caterpillar in the last year alone, it thought it was a growth stock at some point. So, that's just one of the names that's out there, Todd. But there are several infrastructure plays that you want to be a part of because, and I tell people this all the time, we talk about high quality. What could be more high quality than having an infrastructure as part of your portfolio?
Yeah, no, that's great advice. And that's almost you could take it that as a core holding actually. So makes a lot of sense. Achilles, that's great. You always bring the A game. We have to have you back on much more frequently than we are now because you always give the audience a lot to chew on. So I appreciate you joining me today on Buy, Hold, Sell.
My pleasure, Todd. Anytime.
Absolutely. So, on behalf of Achilles Larrea and well, Tobin Smith isn't here. What am I saying? I am Todd Schoenberger. Thank you once again for joining us on Buy, Hold, Sell. Coming up tomorrow at 4 o'clock live, we have Jose Torres, senior economist with Interactive Brokers. We want to hear what he has to say about the Fed. He's a big exclusive for us. So we'll catch you then. Take care now.
Bye.
All right, we're out,
All right.
Achilles. Thank you so
Thank
much.
no, thank you.
I know
My
that was
pleasure.
quicker than what we thought.